Good to have you, Secretary Lew. Welcome back.
Good to see you, Sarah.
So what do you think this jobs report does to the recession debate?
Well, look, I think it's a good jobs number. I don't think there's any way to read it as a bad number. It means there's a strong economy, even with rates being increased pretty dramatically. I don't think we should think it's a sustainable number. We don't have enough people to grow the labor force that much continually month after month. But it means that in the very difficult process of transitioning from the COVID economy to a more normal economy, so far the Fed has managed to raise rates pretty substantially without the underlying economy taking too much of a hit. I think we have to expect. Go ahead.
No, oh, sorry, I didn't mean to cut you off, but just this idea of transitioning to a more normal economy, it's something that the White House is saying. It's something we heard from Secretary Yellen and President Biden and his press secretary, in fact, today. And I wonder if the market is a little skeptical about transitioning into a more normal economy at a time where the economy is being pounded with interest rate hikes and about to undergo quantitative tightening, how it can function as anything soft landing or into a normal economy when that's happening.
Look, I think the markets are getting a little bit ahead of themselves. The Fed has said over and over again that they're going to watch the data and move with determination on getting inflation down, but keeping an eye on the effect on employment. And I think what today's jobs numbers show is that they have some room to continue. We don't know what the inflation numbers will be next week. We don't know what the next jobs report will look like. Markets want to know today what we can't know for a month and 2 months. The Fed doesn't act again for a while. There's no question but that the economy is transitioning. I mean, supply chains are getting fixed. You're hearing from industry after industry that it's less of a problem than it was. Labor markets are healing. They're very strong, actually. And, to say it's completely normal, we're not completely out of the woods. Absences are still high because of people getting COVID. How many people do we all know who've lost a week of work in the last few weeks? So I think it is a transition. Markets have no patience for the fact that it has to take a little bit of while. And they want to know today what they can't know with certainty for some time. But I think so far, and today's jobs report underscores it, the underlying economy is remaining strong.
You have endorsed the Inflation Reduction Act, which faces its first vote in the Senate this weekend, Secretary Lew. Since you came out with 4 other previous secretaries of the Treasury to do that this week, there have been some changes, as reported, that they got rid of the carried interest break provision. They altered the 15% minimum corporate tax, and they added an excise tax on share buybacks. Are you still supportive?
Yeah, absolutely. Look, they've made some changes in the legislative process. You do what you need to do to get the 50 votes that you need. And I think it's important that they have 50 votes because it's important to pass this legislation. The core of the legislation is investing in things that will help reduce the burden on households of high prices. It'll bring health care costs under more control for people in the Affordable Care Act with subsidies. It will reduce pharmaceutical costs for people on Medicare. It will give both individuals and businesses the ability to invest in energy efficiency and alternative energy improvements so that they won't be as dependent on fossil fuels. It'll help in the climate efforts, but it'll also reduce costs over time. On top of that, it reduces the deficit by $300 billion plus over 10 years. That's an important thing to do. We do need to chip away at the deficit. So I think all in all, it's a strong package and it should be passed.